Jamal, we are back. It is Sunday, November 23rd, 2025. This is First Call. I'm your host, Chris Vecchio. He's Jamal Chandler. You're watching Tasty Live. Jamal, how was your weekend?
Well, it's great now that the Bears won. I mean, it's fantastic. I mean, it's probably great for you since you know what, never mind. The Bears won today and it went
Sorry,
well.
what's
And
that?
so I'm pretty
I can't
happy.
hear him, Josh. Can you hear him?
No, it
Having
was
some
great,
trouble.
man. I mean, it was great. That's a large part of it, but pretty chill overall. I really haven't thought much about the last week or so of markets. I mean, it's funny because I've had people ask me more recently, what do you do over the weekends? Do you think about markets? And I try not to, especially in these times of volatile nature markets. I just want to sort of move clearly and what I think about and do trade day in and day out and not think about the week prior, because if you do that each week, these weeks have been wild, I think.
It's been an interesting 2 weeks being back in markets. I can't help but think about it. I took a nap today. That was pretty nice because it's like, oh, I can watch the Jets game or I can nap. I'll nap. They're going to lose.
Yeah,
But thinking about
do that if I were you.
Thinking about the markets for this coming week, I mean, it feels like an odd week coming up because, of course, we do have the holiday. So Thursday, obviously, markets are closed. Friday is a half day. Liquidity is going to be sucked out of this thing on Wednesday. There's a smattering of some things that might be worth paying attention to. Not really much on the earnings calendar, but perhaps with some of the delayed U.S. data releases coming out. But I suppose that's where we should start, Jamal. We have a few minutes into the market open. Weekend Wall Street over on IG.com shows a 0.2% gain for the S&P 500. So maybe we get a little bit of a firmer bounce here. I think the place that people have been looking, at least the one place I've been looking all weekend, has been Bitcoin. Because this seemingly has been a leader the last several sessions where something around 10 o'clock Eastern time, Bitcoin falls. We see Bitcoin lead stocks lower. 2 days of constructive price action here, though, in the spot market. What's your take on the broader state of crypto right now? Because it feels like this has been getting repeatedly punched in the face without any off ramps.
Well, I mean, crypto and the markets are tied together. And by the markets, mostly, I mean, well, I guess I can just say S&P 500 and NASDAQ too. I mean, look, it's all kind of been one trade over the last several weeks, whether it's crypto, whether it's AI related stocks, whether it's the energy related stocks that are powering AI, whether it's data centers, et cetera. It's all kind of been one trade. And, sure, crypto, I think, started the downturn a little earlier, starting like around October 6th. The markets took a couple of weeks longer for it to happen. But there's been the high correlation between Bitcoin and the market. So you're right. It's actually one of the things I think you can look at right now to see like what the market is going to look like before we actually get real markets open. Looking at Bitcoin, I think is a good proxy to see where things are going. And obviously it's been weak, right? And I would say the biggest story last week, besides Nvidia earnings, was the big change that we saw in the CME FedWatch tool. I mean, that thing moved around quite a bit.
A lot.
At one point, we saw a 30% chance of a cut coming,
Sure.
And then the day of Nvidia earnings, which was a wild day, by the way. Mikey and I were on the floor. We did the Option Trading Concepts live show on Thursday morning from the floor, which was absolutely bonkers to see the markets rip and then turn around the way that they did. And during that turnaround is when we saw a little bit more bump in the chance for a Fed rate cut to 39%. But then when we got to Friday, well, it was like 72%, right? So I think that was one of the biggest things that happened throughout the week that those of us who trade day in, day out really watch and noticed. That was probably arguably the biggest thing to happen besides Nvidia earnings.
Yeah, the Fed's in an interesting spot. We're hearing from a host of Fed governors in recent days talking up the possibility of a 25 basis point rate cut in December, which at its lows last week, Jamal, at least if you look at the SR3Z5 contract, which is available on the platform, you're looking at a market that bottoms out at 95.1275. So we are saying something in the neighborhood of 51% chance of a cut. By this pricing measure, it rises back up to what would be now at 22.5. We'll call that an 89% chance, 88% chance. It's a sharp turnaround is the point. The CME FedWatch tool for the Fed funds futures, which would be ZQ contracts, those did bottom out at 30. They peaked over 83. John Williams, the vice chair, the New York Fed president, on Friday told us that he thought a rate cut was possible. And that's probably what moved the market the most because he's the guy who's closest to Powell. And so while Powell's been letting all these other Fed speakers go out and shape the conversation, because ultimately Powell is the quarterback of the Fed, right? If he wants the rate cuts to come, he would just say, let's cut the rates. I feel strongly about this. There is a growing consensus now where you could see that the people who are voting this year might have enough there to give us that cut, even if we're not going to get any more of the significant data releases until after the Fed meeting. So there's no official news release to this, and I don't know if it will even be addressed, but it feels like one of the stories we should be listening out for this week is whether or not the Fed keeps their meeting on December 10th. Because if all these data releases are coming out on December 16th, why not just push it back a week? That way you can make the fully informed decision as opposed to doing something wrong and the market freaking out a week later that the Fed's late, the Fed did too much, yada, yada.
Actually, that's a really good point, and now you're really getting somewhere because you're right. Although it was Williams mentioning, saying what he said, I think there was a big shift that happened after because that came out during the day, right? When they pushed that data back. Yeah, they pushed that data back, and that's actually one of the things that really raised the chances of a rate cut because again, the idea of pushing that data back means the Fed's flying blind and they basically have to almost go on autopilot, if you will. And so I think that would be dope. I mean, they can do that, right? Why can't they move the meeting back? Well, we need this data. We need to push this back. I don't know how these things work. Again, I know sometimes, certain data has to come out for XYZ reasons, but I think that would be interesting because, politics aside, it does seem like, it seems like the data is being moved around on purpose. I'm just going to say that, all right? It just looks like that is the case to me. And I'm here for it. Whatever makes markets interesting and move, I'm actually here for that too. I didn't know you could do that. I didn't know you could move data around like that. And I guess we're learning new things.
Yeah,
I mean, I guess so. I think it was a great man in the second hangover. You just say we just forget about it. You just forget about it. And so that's exactly what's going on here. We just forget about it. We just forget about this data was going to come out that day. We just forget about it.
Jamal, Bitcoin leading the way here. Futures up 4.38%. The spot market indeed telling us that risk appetite was improving with the U.S. equity markets opening here with the futures charging higher, 0.62% for the S&P, NASDAQ up by 0.85%. Russell and Dow Jones lagging behind a little bit. Over in the bond market, bond yields are slightly higher. Prices are in at the long end of the curve in both ZB and ZN. Over in the metals market, gold prices off by about 0.36%, silver off by 0.13%. Energy markets, a little bit more weakness there too. Oil prices off by 0.41% and natural gas down by 2.59%. Currency world, if we take a quick look there, dollar strength slightly and some more yen weakness coming into play after Friday's meaningful rebound. That was not a small rebound that we saw on Friday. Jamal, let's go in a direction here to think about this shortened trading week. Broadly speaking, when I think about a week in the backdrop where the VIX closes out now around a 23. This is a terrible spot for the VIX. If you're someone who likes to lay out long-term trades based on volatility having expanded, going back to 1990, if you look back, this is the 6-month and the 12-month return window that produces, the worst 6-month and 12-month return window when the VIX is sitting between 22.5 and 24.5. So it's choppy, right? I'm curious about how you approach risk management in a week like this, though, because it feels like while the market could rebound, could go up, the margin for error is a lot smaller when you look at a VIX of 23. What's your plan for laying out capital the next few days? Are there any trades that you have in mind? Are you kicking the can until after the holiday?
I feel pretty satisfied with the way my book looks right now. It is long delta. I put on a few what we call delta busters over the last couple of days here between Thursday and Friday, which essentially is selling some put spreads to get long some call spreads, collecting to do that. And so I did that. I already had one on in SPX. I have that for the D's first expiration. And I think, duration is actually something you really have to consider more here. The other thing I did it in was I did it in Tesla and I did it in Meta, names that are basically flat on the year as far as some of the big tech names goes. Speaking of, I mean, we've seen Google have a monster move more recently, and it's been really strong. Amazon is another name I would think would eventually want to deploy that in, but these are all in January. I move things, a lot of my longs, if you will, out to January because I just think right now there's a lot to be figured out. I mean, essentially we got four themes, and it's crazy, Chris. All of a sudden we have a wall of worry. It's the high tech valuations, right? And the AI. Is AI a bubble? However you want to frame that. Fed rate cut expectations all of a sudden is a thing, even though it seems like we might have erased it on Friday, but who knows? I mean, to see such a fluctuation over the last couple of days is really fascinating. So Fed rate cut expectations is something. The yen move. I don't know what the heck's going on. Maybe you have more color on that, and maybe our guest, the next guest coming on too, definitely has more color on that. But the yen move is just fascinating right about now, and so that's the other thing. And then of course crypto panic, which again which tie into the high tech valuation. So those are the four things I'm watching to see if those are going to be something that causes the VIX to go higher or eventually recede a little bit. But most of my longs are out in January because right now there's just a lot of uncertainty.
You mentioned a few things there that I want to continue to run with. Before we do, I'm sure some people noticed this when they flicked on the platform here today. We're beginning to see rolls in the contracts right now. You're in the F6 for oil now. That's for the January expiration. You're going over to G and H for gold and silver, respectively, February and March expiries. You're seeing this filter in the bond market too. H6 contracts now active. Those are the March expiries, Jamal. So just keep in mind that if people are placing trades, some of the contracts that you've been trading, they've rolled over now at the start of this new trading week. And it's something that we're going to see play out over the next few weeks. So just mindful of where your strikes are and what contracts you're looking at when you're executing your trades. You mentioned vol. Vol is obviously our North Star around here. So let's take a look at the CBOE's volatility term structure. And there's a little bit of a kink here at the front of the curve. And obviously, if we take a look at the VIX is sitting right around, current front of the curve levels. So there is a contango as you go out past January and through the rest of next year, but there seems to be some sort of issue or concern here in the short term. What do you make of this? And historically, perhaps there's something that you've done wrong when you've seen a volatility curve like this that will help traders avoid a mistake that you've made in the past.
Well, I think this tells you exactly how the market feels. It's a little nervous in the near term, but it's expecting by the time we get to December/January. And again, it's all about how whatever those particular VIX futures, whatever options they're you taking into account in their calculation. But basically, January to late December to January is looking like things might be calm. You could say maybe that's flashing the Santa Claus rally if you believe in such things, if it's actually going to happen. But right now, again, I think the market and volatility is showing you it's a little worried about those four things that I kind of mentioned, whether it's crypto, whether it's high tech valuations and AI, whether it's the circle of movement of money that we've talked about a lot between a lot of these companies, whether it's CDS's issues for Oracle and CoreWeave, which obviously are big players in that whole thing. It's a little bit worried right now about that, and I think that's what we're seeing in markets.
The CDS story is so fascinating to me because it's such an illiquid market. I have to double check the number, but I think there's been now 161 CDS trades in Oracle CDS the entire month of November so far. 161.
Right.
That's a thin market, man. and it's really dominating, people's psychosis. Okay. Volatility here. That's why I say the margin for error is lower when you take a look at a volatility curve like this. So if you're trading, you're not taking your big swings right now. You're taking your little shots. You're properly scaled. I'm not going naked long, the big guy ES, but a call spread might be feasible. A short put spread might be feasible if it's sitting around the appropriate technical levels here.
And risk defined for sure.
Everything risk defined right now at a 23 VIX. If it's like an 11 VIX, I'm buying out of the money calls and not losing any sleep at night if I expire at 0, right? Like, who cares? Where we bounce from, though, is an interesting area because it's a place where the market kind of peaked out in August. It found support in October. It's now finding some support, at least on an initial bounce here in November. You can make a similar case for the NASDAQ, although it's just not as clean of a chart. There's a lot of damage that's been done. There were some stats that I shared the other day, two of which I think are interesting if you are a bull looking to hang your hat on something, and I'm curious what you make of them before we bring Ilya on. One, On Thursday, we had a move where we gapped open higher by more than 1.5% in SPY, and we closed lower by more than 0.5%. The only other time that we had seen that occur, you have to go back to April 8th in the market. And of course, that was the low for the rest of the year. The other thing is that seasonally, Thursday was the low point for the rest of 2025. If you go back to 1950 for the S&P 500, last Thursday was the day with which the stock market bottoms and rallies through into New Year's. And similarly, if you look at seasonality and volatility, that was the day that volatility tends to peak for the rest of the year. So as a bull, just by design, looking at a market at support, I can't help but feel as long as that support holds, we should be thinking about taking shots against it in that risk-defined fashion.
Yeah, I did see that stat you put out, which was very fascinating. And I actually took some credence in that one. I mean, I just watching the movement that happened on Thursday, I just thought that, first of all, when we reversed, I really didn't have a reason. And a lot of people were asking us that, and we were at the SIBO. I think a lot of people were asking us those questions because they almost want us to turn and ask these traders, "Hey, man, what's going on?" Like, well, they don't necessarily know neither. They're just trading risk, you know. But
Right.
it was a wild day to see the markets up on positive earnings, seemingly a pretty good jobs report, and then to reverse with essentially no news is unusual for sure. And so to see that stat afterwards, I do feel like. Again, nobody knows anything.
That was Mike Butler's fault, by the way, if anyone's asking for a reason. The 11:20 a.m. Eastern time on Thursday, everything's dead. Red on the day later. The market was still green at that point.
Like he called it. Look, we got in the office. We were in this building. I got in the SIBO. He was already there. We were talking, and last I had saw it was up 100. When I got to him, he was like, "Oh, it's only up 60." He's like, "We're going to be down on the day. Matter of fact, we might be down 100." And I was like, damn, you're right. We could. It just felt like it. And the one interesting thing about being close to the trading floor on days like that is it's interesting. Once we did fade and we were all still up 60, 40, 30, you see the fade, orders start coming in, it gets a little busy, then it calms down. Right before it goes red, it's quiet. I mean, like super quiet. You can hear a pin drop. Soon as it goes red, more orders come in. It gets quiet. It gets loud again. And then the same thing, like it just happened in different tranches, and you could tell it was going to be one of those kind of days. So from the floor perspective, you could tell that what ended up happening was going to happen. However, Friday, again, I was shocked because honestly, it's the third Friday in a row, if you look at it, where we did a down and then eventually up reversal and finish positive. 3 Fridays in a row for whatever reason, whatever that may mean. But look, my point is like to reverse the way that we did on Thursday, I really didn't see any real news. And again, NVIDIA gave you everything that you want. And most of those
are the
companies,
worst kind of reversals. Those
absolutely.
are the most dangerous ones.
So I feel like we could either halfway had bottomed on Friday, or maybe this week it ends up being kind of quiet, and then all of a sudden we just flip the calendar and it ends up being a new month. That's just kind of how I feel. That's what I'm playing for. That's what I've been playing for the last couple of trading sessions, getting longer delta, but going out to January because I just can't trust anything in December right now. And again, it's already close to 21 days. So let's just go to January and see how things play out with my trades and options.
Yeah, it's a great point you bring up. And as you go out into January, just a little bit more duration right now can survive. I'm sure Thursday I'm not a zero DTE guy by any stretch of the imagination. Sometimes I take trades, but that's not how I consider my bread and butter trading style. And I don't hold it against myself if any of those trades don't work out, because I'm expecting to lose money on every single one of them, just as a mindset, right? Everything's gravy that comes out of a zero DTE. Friday, talking about that reversal, we had options volume of 93.2 million contracts, 36% above recent average levels, according to our guy in the chair, Frank, over here, with calls leading puts 6-5. Among the 500 most liquid stocks, 30-day implied vol was higher for 69 and lower for 353. So if you think about this from the vol breadth perspective, nice that you see such a contrast there and that collapse in vol for so many single equity names on that Friday bounce. But, I can imagine that if there's one person to say that we're not out of the woods just yet, it's going to be the guy coming up next. And to his credit, with this opening move that we have thus far here at the start of the week, we haven't cleared out Friday's high in either ES or an NQ. It's a pretty little bounce here alongside Bitcoin to start the week, although in the futures market, that was up 4+%, and now it's only up 3.3% or so. Ilya, we have a nice little bounce here coming out of the weekend in stocks, but I'm assuming you're going to channel your inner Larry David and tell everyone to curb their enthusiasm.
I mean, you don't have to go far. You just look at the chart as exactly as you've just described it, and you go, is the sequence low or broken? And what is different about this that we should be thinking about that hasn't been the case since the beginning of the month? Because the top here, as ever, is that October 29th Fed meeting. And everything that's happened since then, the Mag 7 earnings, the kumbaya with the U.S. and China, the overall earnings picture, the economic picture. I mean, we just got the S&P Global PMI numbers on Friday. They were stronger, and that's a continuous data set. That's not these shenanigans with the shutdown and government numbers. So everything is fine, but the market is selling, and it's shrugging off good news. Why? The government shutdown ending, good for 48 hours. NVIDIA, not even good for 24. This is a sentiment shift. And until you have clear and convincing evidence suggesting not only from the positioning, but from the way the price action is working, like, for example, a good piece of news comes out and the market actually rallies and goes, good news. Yes. Until you get some sort of a clear sign from the price action itself that something is different, the playbook remains.
Well, Ilya and I were noting on Friday that when you had the rebound in Fed cut odds that were so dramatic following Williams' speech in the morning, you didn't see yields rise, which felt a little different. We've seen in the past several months that when the Fed's talked up cut odds, yields have gone up because the market says, okay, well, then you're going to reinflate things. You're going to create more inflation. This is good for growth, but you're going to get more inflation. Friday, when you get your rebound in those cut odds, even on Thursday, as you get your rebound on those cut odds, you're not seeing yields go up. Is that indicative of anything to you at all? I know that the long end of the curve doesn't have that much volatility, relatively speaking. And if folks listening are approaching this in the typical tasty manner, 45 in, 21 out, looking to sell spikes and vol, they may not be looking at bonds.
Yeah.
Is there anything to do here in the bond market, though, with that potential change in behavior? As Ilya highlights a potential sentiment shift occurring in markets broadly.
Yeah, I mean, typical tasty sentiment says that nobody knows anything and you can't figure out anything. I think the three of us are different in that we look for tells, right? We look for tells to help guide us. So to that end, I'll tell you one thing that I found weird over the last, not even so much the whole week. The first 3 days of the week don't really even matter last week. It was really more about Thursday, Friday. The weird thing about Thursday and Friday was I didn't really see any corresponding serious bond move. I didn't really see any corresponding dollar move. Same thing with gold. Those three things were curiously kind of quiet, right? It was really all the biggest moves that happened was equities. Those things were kind of quiet.
Thursday, and again, Friday, back-to-back dojis in the dollar to your
That's what I'm saying, bro. Like the day before, you see the big move. Whatever happened on Thursday and Friday, we didn't see that kind of corresponding move in gold, dollar, and bonds. They all three of them were oddly quiet. I thought I couldn't figure that out. I don't know what you guys thought.
I think it's really interesting that gold has had this kind of back and forth where it started to look more like a speculative asset, where you got the end of the government shutdown and gold went up and stocks went up. Then the whole thing fizzled. They both came down together. But then stocks kept getting hammered and gold found a way to hold that back. Bonds found a way not to go crazy and have kind of settled into a range. The dollar has been a tale of two cities. It really depends where you look. So you were saying before the yen. The yen has had a story unto itself, but obviously that's the third most traded currency after the dollar. So it's going to have some knock-on effects when dollar yen is moving all crazy. So that was one story. The Aussie was more so risk sensitive. So was the Canadian dollar. The euro was kind of off by itself. It seems like one of the most interesting parts of all of this, when you look at especially what happened on Friday and Thursday, where you go, okay, is sentiment collapsing? Is it evening out? What? The fact that you're not getting knock-on effects and symmetry in the dollar. So the dollar isn't selling off when it's a risk-on day. The bonds aren't running away when Fed rate cut odds shift. All those moves start to look corrective because you start going, okay, well, so there's not a big uniform macro response. Must not be conviction, must be markets that are extended and maybe some speculative back and forth is evening out. But this is not a move with follow through. Otherwise, we'd be seeing it across.
I mean, is this the fact, like you said, the fact that we're not seeing these follow through in those three assets in particular, is this a result of the sort of, well, I mean, for lack of a better phrase, and just to be funny, the dicking around what we're doing with a lot of these macro data, like, is that a result of that? I mean, because it seems kind of odd.
The dollar has definitely been a little bit weird because of that. The bonds, I think, definitely have been a little bit weird.
Yes, Chris. Yes, that's awesome.
Looking at some of these thin markets, by the way, in the currency futures, like I looked at the I'm like, oh, I'm up 79 grand in my yen position. That's awesome.
Yeah,
yes.
Cool. My God, it's incredible.
Yeah,
How fun would that be?
Okay, guys, I had a pretty good weekend. It's outside.
I concede. Yeah,
I was
so I actually
I'm just thinking about the positioning now for next
short. Finally,
that's what I wanted to talk about here because like I have 47 days to expiration, which is enough time. Ignoring the funky math on the screen, otherwise, thank you, thin futures market. Dollar yen is getting into the teeth of intervention territory. I'm just going to go over to tastyfx tab here, which I'd encourage people to take a look at because it's integrated right onto the platform, and we can just click on dollar yen and over to the trade tab here and load you up. So we're sitting like pretty much near the yearly highs. We're sitting up, getting closer than ever closer to 160. Spot currency markets are open over the next week. So while we're going to have closures in futures and cash equity, it feels like currency, the BOJ, they're just jerks. They just like to do these things around American holidays. They did this a few years ago in the week leading up to Christmas, where they announced their intervention efforts. And so it can't help but feel like when the market's already kind of itchy and you have this thin environment, given what's been going on overseas, traders should probably be watching out for this too as a potential catalyst if things are quieter here stateside.
I mean, it was an interesting thing last week where Japanese officials have been coming out and basically saying, we're going to intervene. We're going to intervene. We don't like it. These are disorderly moves. We're going to intervene. And as they kept saying it, like the market paid attention the first time, the second time, there was some long wicks here and there. And then until you got that kind of cool off toward the end of last week, the market basically was like, yeah, yada, yada, yada. Do something. This would be the perfect time in this thin liquidity, to Chris's point, for the administration, because in Japan, the BOJ is not strictly independent in the way that the Fed is. So the government could basically order the BOJ to conduct an intervention operation. It would be a Ministry of Finance operation, but the BOJ would be tasked with going into the market and executing the moves. So you could very well see in thin liquidity, the Ministry of Finance go, hey, BOJ, buy a big block of yen. And because there's no liquidity, the move goes wild. So I was riding spot dollar yen up from 146 and change, like 146.40, 146.30, basically since July. And I closed everything out on Friday because it seems like we're getting into a place where the markets are goading the BOJ to show them what they're made of. And the pressure on the prime minister is high because this is basically her thing.
Right. Yeah, I mean, I have so much time left on the horizon that in the 64-65 put spread, it makes sense for me to just continue to, I mean, this is great. This is what I wasn't filled with Friday's action, but 47 odd days, if this is going to be an intervention move, Ilya, the 6J contract can fall through 63 prior to dollar yen getting up to 160. So if there is going to be these little balloons that are sent out into the world that tell us that they're probing and testing the market's metal and resolve around,
They're going to start asking for for price quotes, these guys.
Yeah, and we've talked about this before on air, but you'll get those headlines from, like Yomiuri Shimbun, one of the Japanese papers. BOJ is asking bank desks for price quotes in the yen.
Yeah,
and that's kind of like how they're throwing chum in the water to let everyone know like they're thinking about intervening in the market. So if you're looking Thursday night, football's also sleeping because the tryptophan of the turkey's hitting them, and you see some of these funky headlines, like maybe you take a look at what's going on in 6J or dollar yen rates. And that's better than putting something on FanDuel, as far as I'm concerned. But
well, and by the way, if there's a big move and you're not on the wrong end of that big move, BOJ intervention never succeeds ultimately. And so that move would be a good move to fade. I'm waiting for whatever the BOJ wants to do here. If they want to do something, I'm waiting for it to give me a discount to get back in.
Yeah, I'm just thinking about what needs to be done this next week. The only thing that's sitting at near 21 DTE for me is going to be the MES contract. I have been laying out these little trades, Jamal, outside of the crude oil position. So the crude oil iron condor can be put back on, in my view, at 26.3 IVR. We may just need to give it a little bit more breathing room to the downside if Ukraine and Russia are going to get to a ceasefire, because ultimately that means that, probably going to take some geopolitical risk out of the market. But I still can't help but see this military buildup, like off like Turks and Caicos, Aruba, that we're going to be potentially attacking Venezuela soon. Report over the weekend that we'll be leafletting Caracas in order to let Maduro know that pressure is built. So I've been laying out at 50 not anymore, but when I put this on, it was like a 10-5 delta call spread. Just looking at the end of the week, and I'm going to continue to lay this on, even if it's not something that's making me any money, just because I think having some hedge against maybe getting this done during the holidays when the markets aren't open per se, and having the dust settle by next Sunday, distinct possibility. So I'm going to throw some chips where it's like risking
now
20 bucks
this
to
thing.
$10.
When you say this thing, what are we saying? We saying regime change in Caracas?
Yeah.
Interesting. Insert whatever it may be.
Yeah. What's the thing that we're talking about? Well, just so as we're clear.
Yeah, it would be as if for like if Tomahawk missiles fly to Caracas, I'd want to have something on that will explicitly benefit from that. And given the posturing and the military buildup, we saw something similar with Iran earlier this year. There's no reason not to have a little feather in the cap for some vol expansion. Other than that, though, I have nothing that's supposed to roll over this week. And with a lot of directionally neutral things that are going on in the currencies, I'm content sitting there. And then for stuff in like ZN, ZB, gold, silver, that will continue to get rolled. But that's a story for probably early December. Ilya, you first. What are your big plans for this week? How are you managing your book around the thinner liquidity conditions? One, are you executing new trades, or two, are you just trimming liquidity and kind of getting some dry powder ready?
I rolled everything that had to get rolled last week. My TLT calls were getting up close. And so I rolled them out. Now I've got a good 54 days left in them. So that one has been managed. Everything else is pretty easy. The closest things I have are the IBIT puts that have still 26 days in them. And I've been in that thing for a while. So I think my focus this week is going to be probably on FX markets. And I might have to do it through spot if things get hairy elsewhere. But if I'm going to be doing anything this week, it'll be managing my dollar exposure. So if dollar yen does something funky, if something happens with the Russia Ukraine thing, because of course now the president is supposed to go talk with the Europeans because they're not really feeling all of the plan that he's laid out. And so it's shocking. And so there's going to have to be some sort of conversation if they are going to prevail upon the White House for something that might have implications for the euro, because of course, a lot of what is built into the euro here is that the ECB is not going to be cutting anymore. because what they're looking at is a big military buildup, which is going to be a boost to the economy and is going to keep inflation anchored and is going to allow for the ECB not to have to do anything with policy at all next year. So if that assumption changes, euro is going to move. So I'm going to be watching those things, but I'm not sure that there's going to be much to change otherwise. I'm positioned for a risk-off regime change around markets. So far, it's been working. We'll see if it survives into month end.
Jamal, you mentioned some things earlier at the top of the show with respect to Amazon Meta. Why don't you take us out here? How are you adjusting this week, just to remind the viewers that may have come on a bit late?
Yeah, I mean, and that's what's great about what we do, right? That's what makes a market. There's two sides of every coin, and so for me, I generally, when the market is looking scary, things are happening, I take inventory on that, and I try to find ways to play a little bit contrarian on that, and try to find the time frame where it works. I pushed a lot of my trades out to January. Right now, a lot of long delta stuff. Again, it is interesting to me that I can honestly say about a month ago, I don't think we really had a wall of worry. And now we really do. And as Ilya knows, we talked about this extensively when we were on overtime. The idea of wall of worry, there really wasn't one, right? And so now there is, and it's really built up fairly quickly, but the idea of high tech valuations, right? All of a sudden. So I'm looking for those names this week, like the Oracles of the world, the CRV, the Core Weaves. Like, are they going to bounce back, or is there really a serious problem with their issues, with their CDSs and the issues there? Is Bitcoin going to bounce back, right? We've seen Bitcoin fall plenty of times. This is not a crypto winner, I would say. I would just say this is a serious pullback. Crypto winner implies like 40 to 50% falls. I mean, honestly, if people really want to know. So that's what that looks like. And I'm not a Bitcoin bug. I'm just a realist. I mean, like, if it's going to drop, you know what I mean? Like, it's just kind of how that goes. So,
well, Bitcoin is off $1,000 in the last 30 minutes.
Is it? No, that's right. There you go. So I'm interested to see how that plays out this week. I'm interested to see what goes on with the yen trade, and then I'm also interested. Well, again, I mentioned the Bitcoin, so I'm interested to see how those things move. Is this move to the downside in Oracle and CoreWeave really real? Is Meta and Microsoft and those names, like you mentioned, Amazon, I mentioned it initially and you mentioned it again, but those are the names that are basically almost flat on the year when you're talking about the Mag 7 names. Are those names going to get off the mat, or do we have a real serious problem here heading into the end of the year? And are we going to get coal in the stocking instead of any real Christmas cheer? That's what I really wonder.
Jamal, on Thursday, we asked the question on Futures Power Hour, are we exit liquidity? Bitcoin rallies all weekend long. The moment that the futures market opens up, it begins selling. 88,285.77 at the high. Now down to 87,151. Non-stop selling since retail people can get involved. Are we exit liquidity? Stocks off their highs from where we entered the market. But you know what? We're going to have to talk about this tomorrow. Tasty Live resumes 2:30 Eastern, 1:30 Central Time with shows from London. Of course, we have our usual morning show with Tony, with Nick, the Batman, up at 8 a.m., 7 Central Time. So be sure to come back for that. Jamal, Ilya, I will see you guys tomorrow at work. For everyone else, hope you have a nice evening. Good luck trading. Catch you tomorrow. You're watching Tasty Live.